Yo guys, what is good? It's your boy VGOK here, back with another video. I hope you're all doing amazing and are trading safely in the markets. So, welcome to a brand new video and the newest installment to the educational series of videos. Now, the concepts I'm going to be going over today in this video, I feel are one of the most important ones to master, to really elevate your trading game. The main thing you're going to be learning today is how to gain a directional bias, getting that main directional bias, whether it's going to be going up or down. That's right, you've guessed it, we're going to be looking at how to analyze market structure in more detail. So as you can see, these are what we are going to be going over today. So before we jump into the complex, exciting stuff, we need to actually understand how price actually moves in the markets. So if you've looked at any forex or indice or any sort of chart with candlesticks, you've seen that price is going to be moving in waves. Each wave is made up of an impulse and a retracement. Now the impulse is going to be the dominant move and the retracement is going to be the smaller move, also known as a pullback. So when price is actually moving up, you can see that the larger impulse will be moving up and the retracement is actually going to be moving down. So you can see when price is moving up, the larger of the two moves out of the impulse and the retracement is going to be the impulse, and the smaller move is going to be the retracement. And then obviously when price is moving down, we've got it, but just flip the other way, so that the impulse is going to be moving down. The bigger move is going to be the downwards movement. And then the smaller movement is going to be the retracement, which is a small upwards movement here. Now also, as you can see, I've also drawn out a little Elliott 5-wave, as it's easy to see, how the impulses and retracements are within a 5-wave. So here you can see the impulsive movements are going to be from the 0 to 1, the 2 to 3, and the 4 to 5. And then what we have for the retracements are going to be from the 1 to 2 and the 3 to 4. Now it's also good to know that Elliott waves, they don't have to be in just a 5-wave. They can also appear as a 7-wave or a 9-wave. So you could be seeing another further retracement and then one more move up for the 7-wave and then another time again for that 9-wave. And one thing I can't stress enough is how extremely important market structure is in your technical analysis. Because when you determine the market structure on a higher time frame, you're finding out the directional bias. So, which direction the market is going to be going, whether it's going to be going up or whether it's going to be going down. And that is simply what our job as traders is. That's what we're trying to do as a trader. We're just trying to establish how much a certain move is going to be going up or down. Now, a really important fact that you guys need to understand is that price can only move in 3 different directions. It can be going upwards, where it's creating an uptrend. It can go downwards, where it's creating a downtrend. Or it can be going sideways, where it's not really, creating any sort of trend. That's also known as a consolidation or a ranging market. The main thing that we're trying to look out for when analyzing market structure is to determine where the higher highs and the higher lows are in the uptrend, and where the lower highs and the lower lows are in a downtrend. So what we've got here is an uptrend. Now in an uptrend, we're going to be seeing price going up and creating a series of higher highs, higher lows and higher highs. So we can see right here, it starts off at a low point. We then have an impulsive move up to create a high. We then have the retracement coming down, creating the higher low, higher high, higher low, higher high. We have the higher low over here, and then the further higher high, creating that uptrend. Now, it can seem, fairly simple enough to label these on, a chart and see this on the charts. But, we've also got to determine which of the higher lows in an uptrend are going to be, the significant ones. A higher low is actually classed as significant if it successfully goes on to make a higher high that's continuing the actual uptrend. So as you can see here, what I've drawn from this arrow, I've put not a significant higher low. So this is not a significant high low, so I'm talking about this point right here, not this one right here. So this is not a significant higher low, as it failed to create a higher high. You can see that the move that it went on to sponsor didn't really go on to create a higher high, higher than the previous one. And now as the higher low after this one, so this one which I've actually put the label on, this actually went on to create a higher high, higher than the previous one, which is what we need to be looking for to find the significant points within the uptrend. Now, also what we've got here is obviously the same thing, but just the other way around. It's just been flipped, and this is what's known as a downtrend. Now in a downtrend, we can see price going downwards and creating a series of lower highs and lower lows. So we start from the high point. The impulsive move is a downwards move, so it goes from high to low. We then have the retracement of that, creating the first lower high, and then it goes on to create a next lower low, starting off that downtrend. We then see the series of the lower highs and lower lows, and again, I've just labeled here which lower high is going to be the significant one and which one isn't. So here I've labeled not a significant lower high, because that didn't go on to create a further lower low, lower than the previous one, which was here. But this one, this lower high, sponsored a lower low below the previous one. So that is the significant lower high in the downtrend. Now, the next part of what I'm going to be going over in the market structure video is when we see a break of structure, or what's known as also a shift in momentum. So what we can see here is when the price is actually breaking structure. This is when you're going to be seeing an uptrend changing into a downtrend, or the other way around, a downtrend changing into an uptrend. So in this image, which I've got for you guys here, we can see a higher low, higher high, higher low, higher high uptrend happening. And I've labeled the uptrend with the blue circles. And then we can see where price actually breaks the structure over here. And then we can start to see the formation of this lower high, lower low downtrend starting to form. As you can see, I've outlined the significant higher lows in the uptrend in blue. And you can see the last significant higher low here was broken. So this one here was the one that was broken. That was the last significant one. Therefore, that was the break of structure. Also take note that this point here is not a break of structure. So where we see price in this area here, this is not a valid break of structure because it didn't break any significant higher low. The significant higher low is down here. This isn't significant. So this movement down here does not count as the break of structure. Then after we see the true break of structure, which was in this move here, this is the new impulsive move. Note that the new impulsive move is a downwards movement. So we're starting to, we'll start to see more of a downtrend. And obviously, we can start to see, the formation of these lower highs and lower lows. And also analyzing a market structure in this way, so waiting to see a significant break of structure, is how I personally look to take the majority of my reversal style trades. So seeing something like this, or if you were to see this sort of flip the other way around, when I'm looking at most of my trades, if they're a reversal trade, then I'll be looking at taking them in this sort of manner. Now, once I understood completely what I'm about to be going over with you guys, my trading game really elevated like insanely. I'm not going to lie. I'm going to be talking about how market structure occurs within fractals. So just notice that within the 4-hour uptrend, you'll see fractal smaller time frame uptrends and downtrends within the impulses and retracements of the 4-hour trend. So in red, what we've got here is the 4-hour trend. Just a simple uptrend with a low, high, higher, low, higher, high, higher, low, higher, high, and the 1-hour fractal trends that you'll be seeing in between are going to be shown in black. So what we can see here is the fractal uptrend within this first impulse. So you'll be seeing, on a smaller time frame, you'll be seeing something like this. Obviously it's not going to be exactly like this. And then in the impulses, you'll be seeing some sort of movements like these. And then back to the impulses where it's trending upwards again. And then in the retracements, once more. Like so. Now, when you're analyzing market structure, you should be doing it in a top-down style. So by starting the analysis off on the higher time frame and then going into the smaller time frames afterwards to continue your analysis. Now, this is mainly to avoid any confusion in determining the market's true direction. Now, something that I actually used to do a lot was just jump into analyzing straight away on the 30-minute or the 15-minute or even the 5-minute sometimes, without any previous higher time frame analysis to go off of. Now, in all honesty, I was just being lazy with my analysis. I was thinking, why do I have to do the higher time frame? Why can't I just, jump in straight into the lower time frames and, find those entries? And, by doing this, I actually paid the price by hitting stop loss after stop loss, and I was in quite a big sort of losing run. But yeah, in doing this, I was totally disregarding, large amounts of the price action from the higher time frames, which I just totally had not looked at. And, that was why a lot of the time I was just getting my directional bias confused. And, in the end of it, I was just trading against the market because at some times, I'd be jumping straight into a 5 minute time frame, and the higher time frames might be showing bullish, like on this red graph here. But if I'm jumping into the 5 minute time frame, say in this section right here within a retracement, all I'll be seeing on a 5 minute or a lower time frame is gonna be a downtrend. I'm gonna be looking at a downtrend, so I'm gonna be looking to trade the downtrend, and at the end of the day, I'm trading against the trend. And the first rule of trading is you want to be trading with the trend. You want to be trading in the direction of the market is moving. Now I'm also going to be going over this whole concept because I feel this concept is very, very important, and it was a big sort of breakthrough moment for me personally in my trading as well. So I'm going to be going over a few chart examples of where we can see stuff like this and the stuff that we've explained before in more detail on the actual charts. So what we've got right here is GBP USD on the weekly time frame, and as you can see within the green circles right here, I've marked on the higher lows and higher highs within this weekly uptrend which we've been seeing since March 2020. So we know on a higher time frame, on the weekly time frame, we're actually in an uptrend. Switching to the daily time frame, we can look at the actual impulses and retracements that made up that weekly trend in a lot more detail. We can actually see it in a lot more detail now. And this is what I was talking about, because when looking at this, just for example, looking at this retracement here from this higher high to this higher low, if we're looking at that area, solely just this area right here, and say you were to jump into a 30-minute time frame or an hourly time frame. So let me cut the chart off, put it back into replay mode, in the middle of that time. And if I jump into a 30-minute time frame now, when looking at this on a 30-minute time frame, if you're just looking at it like that from the actual price action, we can start to see, looks like a downtrend. We've got this high point here where the market, exceeded. There was no more buyers left in the market. We then saw, this movement down, causing this break of structure right in here. There was a break of structure in here, because obviously we've got the higher low, higher high, higher low, higher high. So this is the significant higher low, because it went on to create this higher high, just like we explained earlier. And then we had this movement down, breaking that structure. We should be expecting a downtrend in this moment here. Now, if we actually forward the price along, you can start to see, it's creating further lower lows. So we had the lower high in here, lower low. So in this, you'd be looking for some sort of sell scenarios. It's creating that nice lower high and lower low formation. So yeah, this is just again highlighting the importance of how we can start to see, within this is a weekly retracement. It's not a small move at the end of the day. We're still moving a decent, 500 pips just for a retracement. So, but as long as you know your higher time frame structure, whereabouts to look to end, selling within an uptrend. If you are looking at sell positions, if you do manage to get in sell positions maybe up here or around here, then it is very important to know when to start to take your profits, within these sell scenarios, because in the bigger picture, you're going to start to be seeing some sort of breaks of this downward structure, in these moments here when it gets to those discounted price regions. So as we can see right here, what we can actually see is, if I was to highlight the lower highs and lower lows within this downtrend now, so we had a high point in there, went on to make a low, this lower high, lower low, a lower high, and a lower low. And what we can see is what price has actually just done right now. It's broken past just above this lower high, this significant lower high. So that there is a break of structure. We then see how price develops, and it carries on going. So as soon as you get that break of structure, you should you should be looking to take partials on your sells, or looking to be closing them out, or at least at the very least making them break even, so you don't have to be worrying about any sort of floating trades that are left. Now, another instant where we can see this is, let me just exit the replay mode, is in this other section which I've highlighted right here. So jumping back in to the replay mode, and let's say we jump into the 30-minute time frame again. And what we can see here is from this higher high on the weekly time frame, that was that weekly higher high, we've then started to see it start to retrace. And you can start to see, you know, where these significant higher lows were broken to start the retracement. So, you know, looking, my eyes are instantly drawn to, you know, this sort of price action here, and then this movement coming in, and then more definitively, it's going to be this movement here that causes that break of structure. You know, I'd say, you know, the significant higher lows will be around this spot here, because they went on to create this further higher high. This movement here comes down, it doesn't quite break structure for me. A good break of structure would be below these points right here. And then we only get that within this move here. We then, as we start to look at price, start to see it consolidate. It's starting to move sideways here. There's no real trend. It's creating some a degree of equal highs and equal lows. We then get this movement down, creating a further lower low, and you know, these would be good points of interest for further sells. So if I was to just mark on, you know, just these rough points of interest, you can see that they actually come into it quite nicely. Right there, we get positive movement away in our point of interest. So then we have arguments for, you know, selling off of this sort of area. You know, we've got a clean area of imbalance and inefficiency of price right in there. And as you know, let's cut it off so we can actually have a look. So if I cut it off there, and we'll draw this zone out. And you know, for argument's sake, let's say you've got validity now to go for these sells. You know, you'd be having, you know, a rough sell entry around that point there. Stop loss at the top. You know, I'm just having a rough entry. It's not, you know, an exact thing, but just for backtesting sake, you know, this would have a lot of validity to it. You know, we'd like to think, you know, there's a degree of equal lows just below all of these wicks in here. And you know, we'd like to think, you know, this downtrend is continuing. So we'd like to maybe even challenge the low of this point here, and you can see the risk reward that we can just look to be getting, and this is just a rough sort of entry. We look to play price on further. You see it does come down to here, and then we start to see it make its way back up. And as you can see right there, actually looking back at this, I think I have gone over this as a trade example before. I think it was my first ever GBP USD, my first ever video actually. It was GBP USD, and I remember looking at this. This was the same sell entry which I had. I think it was based off of a 1 minute time frame or something in this area here. But I only took it down for a 1 to 10 risk to reward ratio, but it was that same movement, and understanding that it's still possible to sell within, you know, a weekly uptrend. You just got to know where to take your profits and where to come out of the market. So jumping back to, say, I don't know, a 2 hour time frame, and just to forward the price, and there you go. You know, it goes on to make a lower low, a further lower low, and you know, by the end of that, that would have been a good, you know, 1 to 15 or 1 to 20 trade. But for me, you know, and to be honest, for a lot of traders, the most important thing to be doing is not to be counter trend trading, like I've just explained. Obviously, you know, this is all about the movements happening within retracements of a larger time frame uptrend. So what we want to be looking at is catching, you know, the moves up. We want to be looking to catch the impulses up. It's effectively trading with the trend. So if I exit the replay mode, I'm going to go back to an area where we saw a higher low, and I'm just going to map out for you guys whereabouts you'll be able to see these sorts of breaks of structure. So let's go to this area right here. Now we can start to see. Let me get rid of all this right there. So that was a high low, and what we can start to see in this area right here, if I was to zoom in, where is the more attractive demand zone? Now, for me personally, what we've got is movements down happening here. So supply is in power right here, supply is in power here. We're still getting mitigations, we're still getting price breaking these significant points right here. So, you know, there's still supply and power. And then I think in this move here, it really goes on to break that structure. And, you know, this is a very significant lower high within this downtrend. And you can see at the point that that is broken is within this move here. So if we look even at a 4-hour time frame, let me just scroll back to where we were looking. So we were looking around here. And what we can see, this was the move that I was talking about that sponsored that break of structure. We've got, you know, we've got a couple institutional candles in here, probably on an 8-hour time frame or something. On the 4-hour, we can just see it's like that. But there is a good amount of imbalance in this area as well, so some inefficiency. So we'll just use this as a general little POI area. You know, points of interest, they don't have to be exact. It's better, to be honest, if they are sort of more vague and more rough, just to give you a rough idea of where to look to trade in. And as we extend price out, we can see, you know, price just doesn't quite get into that point of interest. But looking back at this, the main point to be breaking, to be a significant of significant structure, is this point here, and the move that breaks that is here. So there would be a second actual point of interest, in my opinion, that I'd be looking at around this point as well. So one of these two points of interest, wherever it bounces in, and we can start to see, you know, it approaches this zone quite nicely, gives a good movement away, and when it comes deeper into the zone, it then carries on moving. And we can see, you know, the break of structures. You know, we've got a high, a low, a lower high, a lower low. We've got this lower high and this lower low, and then we start to see these movements up here challenging these points right here. We can see the actual break of structure happening right here. So after this move here, in my opinion, we have a good break of structure to the upside right here. So this was the significant lower high that was broken, and as we can see, after that structure was broken, we get this definitive move up. And, you know, just if I'm on the 4-hour time frame here, guys, obviously, you know, you're going to be able to be going lower down into your analysis to monitor what actually happens and get those refined entries. But, you know, we've got this last sell before buy candle, and it doesn't actually, you know, it price does come actually down to here to manipulate some of these lows. There was some equal lows in here which it wanted to manipulate. We then get this fast movement to the upside, and then from then on, it's really showing that bullish nature of the market, you know, and the start of that main impulse in that weekly trend all the way up to here. So, you know, it's not always about catching the very bottom of the market, the very bottom of a brand new impulse. You know, even by waiting, you know, all of this time, you know, from here to here, you're waiting. It's still a 35-day wait. You know, you don't. There's not a set time where you know you're going to be getting into, you know, the best opportune moment. It's about waiting and having that patience and understanding where you are in the market structure, understanding where these significant breaks of structure actually are, and then waiting and being patient for the price action to fall within our set of rules. So you can see here, you know, just a rough 4-hour sort of entry. Not saying I do enter with an 84 pip stop loss, but just for argument's sake, we'll just draw that out, and, you know, even with that 84 pip stop, trading it to that next the previous high point, you're still getting a good 1-to-6 risk to reward ratio out of that. So there we have the market structure video. If you guys want to see more chart examples, I'd actually recommend to go over my previous case study videos again, because in every single one of the case study videos, there is an instance of where I've actually analyzed the market structure and actually noted down and shown you guys where I'm seeing the significant breaks of structure and, you know, which fractal sort of trend I'm in. But yeah, with that being said, I hope you guys have really enjoyed this video. I hope you guys have learned from it, and I hope you guys have taken value from it as well. If you enjoyed the video, please do like, share, and subscribe. put in the comments anything that you want to be seeing in the future videos, and I'll catch you guys in the next video for more of that trading source.